First, let me talk about the difference between a call option and a put option. And again, if this is confusing for you, please type yes in the chat right now. It's okay. I remember the first time I understood what a call option and a put option. I remember being there. I was on Massachusetts Avenue. I was right off what we call Lobby 7 at MIT. It was about 1 a.m, and I was studying with a good buddy of mine. We'll call him Andy. And we were studying for our exams the next day. That's all I did at MIT. I just studied and studied and studied. And I drank some beer on the weekends, and then I studied and studied and studied. And we were on the blackboards, and we were trying to figure out these things called call options and put options. And I'll stick the diagrams on the screen shortly. And we were like, I don't understand. Like a stock, when you buy it, you make money when it goes up. And when you sell it, you make money when it goes down. But what does an option mean? And then I remember we were trying to get it in our heads for like days. I even think weeks. And then one night it clicked, and we said, oh, I see. With a call option, if the price of the asset goes up, I'm a big winner. And if it goes down, I don't lose very much. And with a put option, if it goes down, I'm a big winner. And if it doesn't, I don't lose very much. And it clicked. And that was a big moment for me. And I started to really understand these derivatives kind of in my DNA. And it allowed me to trade them and price them and make a lot of money from them. And so again, if it takes you time to understand these, that's okay. And that's why inside the Academy, we have weeks to work with our students to get them to understand these structures. So don't beat yourself up. There's nothing simple about this, but it's also a very simple concept because these have been around for thousands of years. So let me show you a diagram of a call option, and I'm going to try to walk you through this. So this is a call option. It says being long a call, which means you own a call. This is Wall Street jargon. If you own something, you're long it. If you have sold something, you're short it. We can get into all that later. So this is a call option. Now, you can see the stock price at expiration. That really means Bitcoin price at expiration. And you see 40 there, and that's the price of Bitcoin at expiration, 40,000. So you can see we've paid $200 for that option. Can everyone see we're minus 200? So we paid 200. Now, if Bitcoin goes down to 30,000 on that graph, we're still only down $200. So Bitcoin can go to zero, we've only lost $200. But if Bitcoin goes up near 40, near 43, we're breaking even. Up to 50, we're making money. If Bitcoin goes to 1 million, we've just made a lot of money, if you can see that graph. So just coming back to me on screen, that is the payout diagram of a call option. Now, I want to go back to that pricing piece that I grabbed off the screen, because if you look at this pricing piece, we can see something similar. Now, again, I want you to look at the green circle on the bottom left. Now, I've circled that to be the price of a Bitcoin call option at 40,000, and you can see that under the red line just to the right. And if you look at the price of that, the last time that traded was about $188. So this is about the exact same diagram I just showed you. So if you went right now and bought a 2-day call option, you'd spend $188. The strike price is 40,000 Bitcoin. So if Bitcoin goes above 40,000 in the next one day and 22 hours, you make money. And if it goes way up to 100,000, you make a ton of money, and you've only spent $200 on this option. Let me say one more thing. If it goes down to zero, you only lose your initial investment of $188. So again, let's go back to me here on screen. And again, if this is too complicated for you, you can watch this back later. Or of course, I'll be going this in detail in Module 3 inside the DeFi Academy. And of course, this can take time anyways. Let me now talk about a put option, and I'll put this thing on screen. A put option is what you're seeing on screen. And again, this is a little complicated at first, but you'll get used to it. So here you see something opposite. You're like, what's going on here, Brian? If Bitcoin goes to 50,000 here, I don't make any money. I just lose my initial investment of $200. That's weird. But if Bitcoin goes down to 30,000 or 20,000 or goes to zero, look at the profit thing. That arrow's going to Pluto. I'm making a ton of money if Bitcoin goes down and goes down to zero. And that is the put option. I make money when the asset price goes down. A call option means I make money when the asset price goes up. And you can jump back to me here. It's good that you have an initial experience with this. And again, remember, with the options, the most I'm going to lose is my initial investments. And that's what frustrates me about the FCA. They've banned options because they're too risky. But if you know all you're going to lose is your initial investment, well, then you should be educated enough to know, okay, now that doesn't mean it's not a volatile instrument. It's going to go up and down, but that is the most you're going to lose if you buy an option. And so again, let's go back to the price on the screen and we can look at the put options on that same instrument. So again, we'll go back to that screen, and here on the right-hand side, you'll see I circled in green. This was done with my own finger today. And here's a put option struck at 36,000. That's the red line. So again, This is $2,000 below the price of current Bitcoin spot, which is $38,000. And you can see that's trading for about $300, $301. Now we can go into this further, why that costs more than the call option. But for this thing, if you bought it, you'd spend $300. If the price of Bitcoin went below 36,000, you would be in the money. If it went way below, you would make a lot more money. And if it went above that, the option would expire worthless and you would lose your premium. And so that is my crash course in options for you. Again, I hope that helped. If you're new to this, it still might be swirling around your brain. And I just want to tell you, 21-year-old Brian, I was supposed to be one of the smartest guys, right, in the country. And I was at MIT studying engineering, and it took me weeks to understand this, all right? So again, the more you review it, the more you do it, and inside the academy, we're gonna try to trade these things. That's when you really understand it, is when you actually put the position on. These are an important part of any financial infrastructure. They're an important part of anyone's portfolio, as opposed to running away from it and sticking your head in the sand and banning these instruments, which is ridiculous. You should master them and understand how to use those instruments. And that's what we're gonna talk about here.